Welcome back. Earlier today, construction spending numbers were released, and it really is a tale of two cities. The yellow line shows manufacturing on a year over year basis up over 60%. Residential construction year over year is negative territory. The black dotted line shows you overall construction, which is rising, but putting into perspective, I don't know if the numbers are really that fantastic. This is on a month over month basis. Manufacturing up 1.2%, lodging up 1.3, transportation up 1.4, commercial down 0.9, but this is month over month. It's not very representative. This is on a year over year basis. Manufacturing construction spending up 66%. However, residential construction spending on a year over year basis negative 3%. Everything else is up moderately. However, I really think the theme, the takeaway from this is to focus on the sectors that are either discretionary or related to discretionary or non-discretionary spending, meaning residential construction is very much spending linked to our discretion versus manufacturing that's not as sensitive to interest rates. Well, that's a different story. Here's the overall total construction up around 5% on a year-over-year basis. A red line is the S&P 500, and we can see that the S&P 500 hit a very significant high late 2021, just as total construction spending peaked. We have come back after the lows we reached earlier this year. However, in the grand scheme of things, we can see total construction spending is still near the lower end of its quadrant. Non-residential construction spending, which is less sensitive to interest rates, near historic highs on a year-over-year basis. Residential construction spending, which again is more discretionary, it's more linked to the individual consumer, in negative territory. Granted, overall construction spending is better than it was 6, 7 months ago, but still residential construction in negative territory. Commercial construction spending, which I would say is in between manufacturing and residential, in the sense that commercial, it's, we think of shopping malls, things of that nature. If commercial spending doesn't look good, then it really does, speak to the strength or lack thereof of consumer spending. Here's highway and street construction spending, which is at the higher end, up 10% year over year. But this is more the result of government contracts, not as closely linked to the economy. Here's healthcare construction spending, and this is probably the strongest sector in our economy right now. It's healthcare, and that's near historic highs. Manufacturing construction also near historic highs. But interesting enough, we just had, in the past couple weeks, negative Empire State manufacturing numbers in New York, Philly Fed Index, that's manufacturing in Philadelphia, that also was negative. So there seems to be a little bit of a disconnect. There's a lot of spending in the manufacturing sector, but the manufacturing indices, New York and Pennsylvania in particular, do not look so good. Office construction spending, I'd say it's kind of middle of the road, a little bit less than 10% on a year over year basis. Lodging also around 10%-ish on a year over year basis. Lodging certainly is, very much connected to the consumer as well. Here we see power construction. Utilities are simply considered to be a defensive position. They're better than they were in a while. Maybe that does tell us that defensive stocks are probably faring better than the more aggressive ones lately. But still, very much near the lower end of its historic cycle. Here's transportation sector construction spending, not really making new highs, sort of treading water as well. Here's overall on a year over year basis, the different sectors within construction spending. The strongest one, again, is manufacturing, but that has weakened. So, what was the strongest sector? It's still the strongest sector, but it's not going up anymore. The red line, the residential construction spending, is improving, however, still in negative territory. And again, you compare the strongest and the weakest, the residential versus manufacturing. Which is more sensitive to interest rates? Residential construction spending, which is more closely connected to the consumer. And I would say on a more reactive to economic changes is residential spending. Manufacturing construction spending, less I would say less linked to interest rates and inflationary pressures. Certainly, no sector is immune from inflation, but I think it's a little bit more resilient and maybe even a defensive picture, along the way as well. But we have a full economic calendar and employment numbers at the end of the week, which certainly will be interesting to see. We hope this has been helpful. We look forward to seeing you back soon.